we go. The opinions and views expressed in this podcast are solely those of the Mortgage Dudes only, and not those of Equity Resources Incorporated or Greentree Mortgage Services. We're not crazy. Think of them as your slightly odd, yet occasionally hilarious uncles that are very knowledgeable about mortgages. I will say, together they have over 45 years of experience in the housing market, and that may or may not have included bourbon, beer, and cigars. They are here to enlighten and entertain, and we cannot be responsible for the language or jokes. So buckle up and be ready. Things are about to get interesting.
I've had two situations where the one was recent one. It was a friend of mine that they were looking for a second home. And is that a little Buddha?
That's a little Buddha, baby.
That's it almost looks like me sitting down on it.
That's why I put it there, because it reminded me of you. I'm setting an inflated one to your wife, so
yeah,
she
there
has
you
two
go.
of you.
Hey everybody, welcome to Mortgage Dudes. I'm Shane Marzullo. This is my ugly partner, Ed Moloney. We are the Mortgage Dudes. Ed, I'll let you...
I shaved and I cut myself because I wanted to look pretty for you today.
I know.
So,
I appreciate that.
Shane,
do you shave daily? Do you shave your face?
Once every 3 weeks, usually, because I just...
Oh, my God. I could never do that. I have Dago hair where if I let it grow... all of a sudden now it's a bunch of white hair or gray hairs. I don't know where that came from. But they'll go here. So I basically shave daily. I shave the head, and I will shave my head any day. I hate shaving my face. It's just...
Oh, yeah. Literally since COVID, most times I'll go 3 or 4 weeks. I won't shave this or this. Then I'll go to the barber. They'll clean it all up. Yesterday I had an event, so I shaved. My wife's like, "Oh my God, you shaved!" I'm like, and I didn't go to Frank the barber. So there is a lot going on. I mean, we got an election coming up. Oh. We've got inflation. We've got people confusing Fed rate to mortgage rates. Let's dive in, baby. Let's dive in.
Yeah. Well, first, I want to see. It's been fishing season. So what's Ed's fishing count? Now, I just see on Facebook that you were fishing a few days ago on a big boat.
So Ed usually gets out on his boat, which is called the Attitude of Gratitude, because I'm grateful to be on it, not with Shane and not picking up horse at my house. But the Attitude of Gratitude is a 24-foot Key West center console. Past years, the last 3 in no order, 45, 50, and 40 times out. This year sucked. June and July, we had win. Small craft advisories says do not take boat out. So through yesterday, I have 29 times on my boat. This is an important number because sometimes Farmer Ed gives away Farmer Ed Yetis, and that's one of the numbers. Also, I've gotten out on 9 charters. So compared to other years down, our striped bass season from shore really starts to pick up as the weather gets colder. I caught my last striped bass November 20th last year. I've got a little, unlike you, who lifts a lot of weights. I don't even like doing anything. But I've got some arthritis in my shoulder, my clavicle. That was a big bump. They might have to do some shaving of it. I said, let's do that after November 15th.
That's a winter project. That's how we do
a winter project. Okay, so how I heard you lifted a lot of weight today. Tell me what you did.
Yeah, today it was our 1 rep max thing on our back squat. So I did 415 pounds, which is 10 pounds over my last time, and I probably could have done more, but I'm like, oh, that feels good. I'm at the point now at my age where I'm like, look, I'm not breaking records. Like, I'm not a kid again. So I'm like, I'll do what I can. The fact that if I'm doing that much weight on my back or doing heavy deadlifts or bench press, or the weight I'm doing, I feel like, you know what? For an old guy like me, that's still, hey, that means I can pick up my grandson without a problem. That means like my kid needed a safe. We bought a safe for her. It said on the box said 2-man. I was like, it's like 85 pounds. I just lifted the whole thing up, threw it in the back of my truck and carried it into our house. I'm like, this is 2-man crap. This is one old man.
Question on that is your wife impressed by the weight you lifted?
No, she's never impressed with me. She's just, matter of fact, we go to the same gym, but she goes the hour before me. She goes to the 7:00 class most of the time, unless she wants to sleep in. Then she goes to my class, and we barely talk to each other at gym. She'll just kind of I don't really know him. Keep going. Wears her sunglasses, walks away with me.
So before we dive into home buying, did your daughter just buy a home? Did I see?
She did.
Was she the one that was the tenant in your slumlord multifamily, or no?
She was my original tenant. So, my oldest daughter bought her first home with her boyfriend, and they've been living together for a bit. And his house, which was her neighbor, and that's how they actually got connected. Which I knew there was something going on when I was working on the house for her. And he walks out and is like, hey, Savannah, I'm going to go pick up some groceries. You need anything? And I'm like, dudes don't do that without a reason. So I'm like, okay.
Is she the one that's provided you the grandbaby?
No, that's my youngest. That's my youngest. Yep.
And she still lives at home?
No, she lives in that house. She lives in the house with my grandbaby and her boyfriend. So.
Oh, the one that you own, the slumlord house.
Yeah. Well, both of them live together or live right next to each other, which is perfect. Because, as sisters, I don't know, sisters love to fight and are catty to each other. But if you cross one of them and you're not family, they will kill you. So
when your other daughter needs a real good mortgage person, we can give them to Brian since you're not very good.
Yeah. Well, Brian, trust me. My old young one will probably expect me to pay for the house. So,
well, let's dive into home buying and some of the things going on and some of the ideas. If you don't mind, I'm going to kind of start with this one. We got to get people to think outside the box. The fact of the matter is, everything costs more. Renting costs more. Owning a home costs more. Shaving Shane's head at a barber costs more. All of it does. So I had the pleasure the other day to be at Copeland Chevrolet on Cape Cod, Chevy and Subaru, and they brought in 26 of their employees. Why? Cape Cod, one of the biggest issues is housing. Some single family, 3 bedrooms, rent is like $3,000. Yes, $3,000. It's insane. Insane. And one of the biggest problems. So unlike a traditional first-time buyer seminar with a bunch of slides and stuff, I had these 26 people in the room, and I said, who thinks renting sucks? They raised their hand. Who thinks they can't buy? They raised their hand. So we started with the big misconception. You can buy with a friend. You do not need to buy with a spouse, significant other. So you got 2 friends. They work at the same company or not. In my market, maybe they afford $300,000 each. Well, you can't buy anything for $300,000, but for $600,000 you can. Now they both buy it together. Maybe they have families. They divvy it up. We have something called accessory housing that allows us to get through a lot of the hoopla to make legal apartments out of basements or garages.
Yeah, I've seen stuff like that.
So there's a lot of options. When you rent a place, if the landlord says bye-bye, you're gone. If you had a lot of overtime and all of a sudden you don't, it's not like you rent out another room. If you own something, be it on your own or with a friend, you can rent something out. And I got to tell you, these 26 people, it was awesome. We also went through, Ed, if I buy a single family, I'm going to rent our rooms without count. No, not unless you have a history. But what we could do is get mom, dad, grandpa, uncle to co-sign. We use their credit and income, basically, to allow you to afford more on paper. But you already know you can rent our rooms. When I asked those 26 people, how many knew somebody that would rent a room from them? 25 raised their freaking hands. 25. Wow. To give you an idea, in this market, you can rent out a single room for $1,500 a month in some cases.
No kidding.
It's insane. Every market's different, but the rule is still the same. of let's get people out of fear. This is why we do this podcast, is to educate. Because most people go, oh, here's your pre-approval. You can't. Let's think. So anyone listening to this, if you've got an adult, semi-adult child, by the way, age, there's no age discrimination. If you're 90, you can buy a home.
30-year loan.
18 or over, you can't be under 18.
We want you to live 30 years to pay that loan off.
Yeah. And that's a big misconception. That was something that came up in the class. So let's dig into this, because I know you've got some examples and some ideas, because it's important for people to know.
I'll tell you what, it's funny. I've had two situations where the one was recent one. It was a friend of mine that they were looking for a second home. And is that a little Buddha?
That's a little Buddha, baby.
That's it almost looks like me sitting down on a.
That's why I put it there, because it reminded me of you. I'm sending an inflated one to your wife, so
there you go. There you go. But yeah, so my friend bought a house, wanted to buy a house in a vacation area, and his friend was doing the same thing. And they were talking about it. They didn't know each other was looking for that. They talked about it. They're like, hey, why don't we go in together? And it was the best deal for them. Because now versus working at, instead of us looking at maybe a $300,000 or $250,000 each, now they combined into $550,000. And then they just take turns every other weekend, and they worked out a plan. And here's the best part of it. I asked my friend Scott, I said, so are you happy you did it? He goes, I'm ecstatic, and I'll tell you why. He goes, when it comes to like a vacation home, he goes, the only thing that sucked was like, if we owned it ourselves, then if you don't go every weekend, then you feel like you're not getting it. He goes, but when we had every other week, felt like we were like, he goes, I was excited the days I knew I had to go, but yet then I was also excited the days I just didn't have to go. And it worked out good. What were you going to say, Ed?
And I love that, because on Cape Cod, what happened the last 3 years is everybody bought a second home on their own. Right. Then they tried to Airbnb it. Rentals were down 38% on Cape Cod. 38%. So these jackapples who went and bought it on their own are now going to have to sell them. And we're starting to see that effect. But if they had bought with a friend, you hit it out of the park. They offset their costs. They offset their emotional piece. It's like people say to me with the boat, well, why don't you keep the boat on a trailer and you go from here to there? No, I keep it on a rack system. It goes up, it goes down. I jump on it, I go. Otherwise, I wouldn't be out as much and I would be regretting having the boat. I love how you brought the emotional and mental part into this. And from my end, I'm seeing the financial part. These people bought and said, oh, yeah, we'll be able to rent it out, blah, blah. On Cape Cod, 38% seasonal rentals. You got to remember, our season's June, July, and August. Really, middle of June through August is 10 weeks. You lose, on average, 34 of those 10 weeks. All of a sudden, those people are counting on those 10 weeks to make their extra payment. And now they're struggling. Then we've got the economy and people getting laid off. So I love that idea.
Well, and the other thing is I had the two brothers. They were twins, which this is hilarious. They were twins, and they always hung out together and everything. They bought a twinplex. One lived on one side, one lived on the other. And then the one brother got married, he basically just left his portion, bought another home, and he rented out his portion of that house, which was perfect. So, I mean, what Ed and I are kind of referring to it for everybody is this. If you can go back and like, man, I just can't afford it, but you have a friend that may be wanting to do it, then you set up an agreement with each other. You basically buy the home together, or you buy it, and like I said, Ed, rent out the rooms, like get mom and dad to co-sign, or grandma or grandpa. There's a lot of options, I mean, I think we were kind of talking, I think, what did I have here? On 100, if you did it together with somebody, for example, on $180,000, let's say you're buying a house for yourself. Now, this is Ohio prices or Michigan prices, not Ed Moloney prices. someone's buying a $180,000 home by themselves. And in our area right now, basically that 150 to 190, those are hot spots. Those go quick. And so then you're at, 3% down, need $5,400 plus for down payment. And then, plus your monthly payment, roughly $1,500 or whatever. I'm sure whatever the payment is. Now look at it this way. You go in with somebody, maybe you buy a $250,000 home. And I'm going to tell you right now, there's a huge difference in quality of home, size of home from 180 to 250. So now you're going to a bigger house, getting something nicer, maybe the down payment, again, if you looked at the 3% down, it's $7,500. So now you're splitting that money with somebody else as a down payment. And the payment is only $2,060 more, instead of $1,500. Now you guys are still paying less overall. You're buying a bigger home for less month and you're splitting it with somebody. Now, which it's a great option for you the first time buy. And let's say in a year's time, like, hey, you know what? I met somebody. I want to buy my own house out. Well, your other person can say, okay, well, you know what? I think I'm just going to rent. I'm going to buy you out. I'm just going to refinance the home, take the loan, maybe buy your portion out of interest or whatever. There's options for you. And that's what Ed and I can do. We can walk you through everything. Go ahead, Buddha Ed.
I think that's what's so important. Back to what you said on the multifamilies, when I was at the Chevrolet dealership, I said, what about going over the bridge, driving 30 minutes? But now, because on the Cape, we don't have many multifamilies, but 30 minutes over, you do. Now, under the new conventional program, you can get in for 5% down, where only 2 years ago was 15%. The bottom line is the point here is people are living in freaking fear. They're living in fear. So you adult parents that have adult children living in your basement, you want them to have them call us. If you have coworkers, friends, fear is the biggest problem right now. In my 21 years of this business, people are in fear. People say, I can't do it. It's too expensive. There's no way I'll ever be able to afford. And maybe not on your own, but to do it with somebody and Google anything about wealth. Wealth is built through real estate. The difference of renters at 54 years old and homeowners at 54, it's like night and day.
Yeah.
And you can have a dog.
Right.
You can have a dog. You can have a horse. You can have a cat. You can have a baby Shane Buddha. You can have it all if you're in a house. In a client apartment, they might say no purple unicorns allowed. But in your own home, you can do whatever you want.
You can do whatever you want. Per county zoning requirements. Yeah. Some people have issues with chickens. So
this is going to be, we're going to get to the point on this one because we got one other big subject and then we might just kind of talk about cigars and split.
Yeah.
Refis, everybody, blah, blah, blah. My first thing is do not go by what the media says. I read something the other day. X percentage. First of all, rates are determined by your credit, your loan to value. I am so sick of hearing, well, blah, blah, blah. Everything is more individually specific now than it was 10 years ago.
Oh, God, 5 years ago.
Yeah, 740 used to be or above was like God rates. Now it's 780 and your loan to value. So be careful. I'm going to throw it to Shane because there's a lot of crap in the news and mortgage people that are not so good. They should talk to Buddha because they're not being so good. Okay, Shane, take it.
So here's the thing. And Ed and I kind of talk about this because it's about, when you look at percentages, I have in our area people like, well, I heard 1% and you need to do something. Well, it depends on your loan size. Like for me, in our area, maybe 1% isn't squat. It's not, it takes years to recoup that money that you're going to refinance. Why would you do it? But then, and maybe in Ed's area, it could be 0.5% or 0.75 because of the loan sizes. It's a big difference. If you're saving a person $400 a month at 0.75 rate decrease, hell, that's an awesome deal. maybe ours is like $60 a month. Well, that doesn't make sense a lot of times, and I will tell you, there's nothing worse than the online companies, such as, let's just say, like Missile Mortgage or Sloan Mortgage or whatever they call themselves this week. They advertise this low rate of, hey, you can get a 5.625 rate. You look at the fine print. The fine print says, oh, you have to have a 760 credit score. It's based on a $275,000 loan with 20% equity in the home, and we're charging 2 points. That's what they say, plus there are other fees. If you do the math, and it's real simple, there's something called an APR mortgage calculator, and you can sit there and go, this is the loan size, this is the rate, this is what the fees are. I mean, if you break it down, like Missile Mortgage, they're charging a person 3% to get this low rate, and plus additional $800 in closing costs. I'm like, are you kidding me? Hell yeah, I'll do that all day for somebody. You're just screwing people over. You're gonna pay $9,000 to refinance, and when that's just the lending fees, not even title fees, escrows, any of that crap. So you got to watch what you're doing, and that's where we break stuff down. We're not. Hey, you know what? If someone's giving you something for really low, good, but let's look into it. Ed, go ahead.
The big key there is the break-even analysis. So what a break-even analysis is, we're just talking a rate and term refinance. Defining a rate and term refinance, your rate is at X, we're dropping it to Y. The only reason you're doing it is rate and term refinance. You're not taking any money out, you're not changing your term per se, you're just lowering your rate and thus your payment. We look at that over the break-even. So the big thing that Shane brought up is closing costs are somewhat fixed, meaning your underwriting, your processing, your appraisal, if there is, a lot of it's fixed. Some's variable, title insurance, but what would work on a $200,000 loan versus $700,000 loan, your break-even is going to be much quicker. You need to look at that. Then you got to talk to the emotions of the person. What do you mean by the emotions? Well, for somebody, $100 might be a big difference because they're worried that their husband or boyfriend or girlfriend or wife are going to get laid off. That might make sense. Others might go, well, I need 9,000 to be 1%, and you're at 0.875. I'm going to wait. I'm like, okay, here's the difference in that eighth. This is where the market's been. Here's where your credit is. If it goes down by this much, you're not getting. Everybody with a rate above X. Not allowed to say rates, but yeah, I will anyhow. Kelly can come hit me. If you have a rate above 6.75, just have a freaking conversation. That is your existing rate, so I don't have to say APR, guys. Existing rate on your mortgage. If it's about 6.75, reach out to somebody. If it is not Ohio, Michigan, Maine, Mass, Rhode Island, what's the other one?
Florida, others, what other states?
So we could find somebody that can help you to build. We could talk general pieces. But the biggest thing there, but there's other reasons other than rate and term to refinance. One is to remove PMI because the value's gone up. Shane, take it from there.
I mean, the fact if we have enough equity in the home, we can get rid of the PMI. Now you're saving additional anywhere from $70 to $200 or $250 a month. That's a huge savings. Even if the rate is only a 0.25% lower, but we can get you get rid of the MI. That's huge. So something to think about. And then then you get, maybe you're currently at FHA. With the FHA mortgage insurance, which lasts for the life of the loan, unless you put 10% down, then it's for 11 years, versus conventional, which falls off pretty much once you have 20%, 22% equity or 20% equity, you can request it. That being said, a lot of times it's less than the conventional PMI is lower than FHA PMI in some situations. So it's something to look at and least run the numbers. It costs you nothing to sit there and ask questions. If you say, hey, Shane or Ed, I'm thinking about doing this. I don't have to run your credit. I don't have to do it. I can do kind of like hey, this is what the rates are right now, hypothetically, this, and this. If you just want to ask the questions without going through all the rigmarole, we can give you some guidance. It's nothing's locked in. I'll be more than happy to assist you, but it's something huge. Go ahead, Ed.
One other area that we didn't really cover is I've had clients come back to me. Their life has changed. They've got a great loan to value in a great rate, but they've just hit a shit show. Their kid needed money, their car, their credit cards are through the roof. I looked at somebody's Macy's card the other day. This should be effing illegal. 33% interest. What is my government doing? Go fix that, please. 33 effing% interest. Nuts. So what I'm getting at there is there are cases where we might be able to offer a fixed second mortgage and keep your great rate on your first, but there have been cases that have come across my desk that the main option for them, once we looked at everything, maybe they were at a 4% rate. Maybe I was even taking it at a 6.5 or 7. But their actual rate, when you averaged everything out, was like 9 or 10 because of their credit cards, their things. I had one guy, the new pro window loan that was 28%. It was 60 grand. I'm like, so we look at everything. Everything's individualized. Have I brought people's rate up but saved them $1,900? Showed them, I don't want to do this. And they looked and said, Ed, if we don't do this, ultimately the stress on our heart, the stress on our emotions and mind.
Well, it possibly leads to bankruptcy, divorce because of arguments. That's a huge issue with families. Money leads to a lot of problems, and something like that can why put them through all that.
So, question for you: soft pull credit inquiries. It's the big hot thing. What's your take on it, baby?
I swear to God, I hate it. All right. So here's the thing. People are like, oh, we only do a soft pull credit report. Okay, great. Well, that's basically just you telling me what your stupid Credit Karma score is, because that's not even a real score that any lending institution uses. Right. The problem with soft pull is, yes, it gives us the actual credit score. Yes, we can run conventional findings, which means but can't do government stuff with it. And here's the thing. For me to actually make your file a good application, I have to pull your credit eventually. So between the time that this loan officer does a soft pull credit report and let's say 5 days later, then you have to pull a new credit bureau because maybe you went in an application, you found a home, put an offer in. Well, let's say, hey, that your one credit card just updated because you had to do some medical emergencies for your dog and you had to pay for it and you maxed out your card. And all of a sudden now your credit score went from 740 to 680. That's a huge difference in rate. And it's possible where you might not get approved. So if we just pull a hard credit report, it's good for 120 days. If they pull a soft report, it's good for that 5 seconds right there. That day, it's good for. That's it. So it's useless. And they're doing you such injustice by saying, well, inquiries make up less than 10% of your credit score. So if you're going to worry about that, how about paying the bills on time, bringing down the debt on their credit cards? That's what's more important. Because I've had people like, well, you pulled my credit report and my score dropped on my Credit Karma. Again, Credit Karma's crap. It's not real. The reason why your score dropped was you decided to max out your credit card or opening a new credit card, which screwed your credit. So apparently it's a piss me off point of
I'm in agreement with you because we have professionals in our own company that say there's softball. Me and you're like, no, I'm not saying right, wrong, or otherwise, but the two bald, beautiful men are usually right.
We're not usually, we are right.
Yeah, other than when your wife tells you you're wrong, because I met her and you are wrong.
Hey, you know what? Eventually she agrees with me.
Yeah, I'll make sure in April that me and her have that discussion. Every April, me and Shane get together at a company function. Last year, we stood outside the hotel. Shane brought bourbon, and we smoked cigars. Yep. We were considered the troubles of the company. HR does not look at us in a good light, even though we're shiny heads. Would you agree with that?
They look at you better than me.
I don't know. So
is it like I think they have like a warning, like our photos, like at a post office type of thing, like beware warning.
Do not act like these employees, and you will do well.
Yeah. No,
I wonder if the advisor actually watches these. And if you do, remember we're your two favorites.
Yeah, well, he likes all the bald guys. He can relate to.
Yes, especially ones named Ed. So we're gonna really quickly get into one other subject, and we're gonna have parting shots. New realtor rules, how it really affects you. I'm gonna give my summary. Everybody's got a different opinion. I'd love yours. So basically, to go out with a realtor, at least my understanding is, you got to sign a buyer's contract. Most realtors had you do that before. The big thing is it's now big and scary, because in it says you are responsible to pay the realtor X, 2%, 2.5%, whatever. But I'm finding most realtors having discussions with their clients. Hey, we're only going to offer on houses where we're going to offer that the seller is paying the buyer's commission. Because if you've got a buyer, they got 3% in the bank, they've got just enough for closing costs, they don't have money to pay you freaking buyer's agents. So that's the piece. Can that become a headache? Yeah. In my opinion, this was an ambulance-chasing jackapple attorney that made this. But it's the world. And
you just said the main culprit, attorney.
Attorney, it is. That was what...
They screw up everything.
But here's the thing. The consumer didn't gain money. That attorney made millions of dollars. What the consumer got was pennies across the board. Fine. I'm not arguing if it's right or wrong. Here's what you need to do. You need to be ready to sign that. You then need to be ready to have a conversation with your realtor to say, when can I break this? When can I not? What are we going to do? What is the minimum compensation you will take? And it's a lot of diatribe right now. They're figuring it out. Boom, take it from there. What's your interpretation? Because everybody's different.
Yeah. So, it's been interesting. Our area, our real estate board is fairly large. It stretches over multiple counties. So they've all came up with a plan, and they all have the same one. Basically, they work off. Some agents are like, "Hey, I'm charging you 3%," and they get into a house where maybe the seller is like, "Well, I'm only going to pay up to 2.5." Now, some agents will say, "Look, I'll tell you what, I'm not going to make you pay that extra half. Just do me a favor. Refer me somebody. I'd rather have you refer me your friends and family than make an extra half." They're kind of doing the right thing in a way. And then some people are like, "Nope, I want all that money." I'm like, "Okay, well, is it right or wrong? That's not for me to decide. That's up to you." I think agents do a lot of work. It's not like, "Oh, we're just opening doors." No, they're actually going in there, and now, mind you, there are some agents out there like loan officers. They're just useless and give you bad advice and everything. But there is a very high percentage that are going to look out for your best interests and are going to do the right thing. And I think, the media has put this out more and scared people more. Have a conversation with your realtor. They'll explain it to you. I mean, we are loan officers. We can give you advice. but I'm not alone. I'm not a realtor. I don't want to be a realtor. And and if your realtor also says they're a loan officer, do you really want that as your person to represent you? Because now are they in your best interest? They're trying to get a loan give you a loan, and they're trying to sell you a home or find you. I think I'd rather have someone who's impartial and actually knows what they're doing. Look, I've been doing this for over 27 years. I've been involved with real estate for long. Am I a realtor? Hell no. Do I want to take the test? Hell no. So stick with what you know. When you get somebody who's like, oh, I'll be a realtor and your loan officer too. Oh, so you just want to make a bunch of money on me. That's how I'm understanding your concept. So again, off my soapbox. Talk to the agent. I mean, I'm hearing a lot of agents in our area are doing 2.5% to 3%. And again, our prices are lower than yours, Ed. So maybe in your area, it might be a couple percent. Now, there are some agents out there that are doing I'll just charge you 1%, but that's only this many homes, and they're doing the a la carte option. Right. If you want me to write a contract, it's $500 each time, and they can collect money up front. They can get money up front and keep it. So
it's those
things to think about.
It's a changing world. Have communication with the realtors. If you're interviewing one or two, talk to them. Also, make sure they do this full time. It is parting shot time. I think some people want some T-shirts.
Yeah. Hey, I'll tell you what. Anybody who's looking for an awesome T-shirt, Mortgage Juice T-shirt, just shoot us a comment I'll tell you what, we're doing it differently. Shoot us your opinion of the show. And we'd love to hear from you. Either message us on Facebook if you're friends with us, or just do this. Email us at mortgagejuice@callequity.net. Say, I love you guys. I would love to have a T-shirt. Maybe we'll send you a T-shirt. You never know. But you got to listen. You got to find out. So I will say my party shot is this. We've gone over a lot. It's all education. You know what? And talking to the right people again. It's just getting you. Don't believe all the crap that's on the web. I don't go to I go to a doctor if I have an issue. I don't go to WebMD. Otherwise, I find out I have thyroid issues and I have some rare disease that's only been 2 people in America. So go to a professional. And go ahead.
My parting shot is simply this: enjoy every day. Tomorrow is not promised. Unlike Shane, I'm not as old. I will be 53 in January. Yes, January 15th is my birthday, so expect to send me something. The reason I bring it up is I lost my mom when I was 24 and she was 54. We get all caught up in the politics, in purple unicorns, in all this stuff. Just enjoy the day. Anger and frustration. When you get angry with somebody, you only hurt yourself. So enjoy the day. And Buddha loves you. Bye-bye now.
I love the Buddha, buddy.
Thank you, Shane.
Hey, thank you, Ed. Everybody have a great day. We'd love to hear from you.